today we'll be addressing two main questions. The first one is tips to achieve financial freedom. And secondly, how do you start with this entire journey? How do you start, for example, your investing journey? Looking forward to lots of knowledge shared. Ess, welcome. It's great to have you here.
Hi, Higgo. Thank you for having me. Hey, I'm excited and looking forward to the discussion.
Awesome. So let's address the first question that's obviously on everyone's minds, and that is, how do you achieve financial freedom? So do you have any tips that you can share on tips to achieve financial freedom or financial independence?
Yes, so I think it's important to take a step back and understand what is financial freedom. What does it mean? What does it look like, So financial freedom for me means, being able to take care of my expenses through passive income. I want to be able to earn an income. I want my money to work hard for me. It means investing my money on a monthly basis, on a yearly basis. And because through investing and my investments growing over time, they'll be able to take care of my monthly expenses. That for me is what financial freedom means. So what are the tips? I think for me, number one is have a plan. What does that mean? But I think financial freedom for me made me realize that no, you need to have a broader view of where you're going financially. What are your financial goals? What you need to do is take your monthly expenses, multiply them by 12, get that figure, that annual income, annual expenses, divide by 0.04. which refers to the 4% rule, right? And it will give you a figure. And that figure, or your financial independence number, is the amount you need invested to not work again, but allow your investments to pay you monthly income so that you don't need to rely on a salary. You can stop working and your investments will be able to take care of your monthly expenses. And it's referred to as the 4% rule that says this amount invested, you can draw down 4% of it on an annual basis and you'll still be able to survive for a long time.
Just on, allowing your investments to pay for your expenses, like where does payment come from? Is it dividends? Is it selling portions of your investments?
All right. So what that looks like, Higgo, is one is through, share price appreciation. So for example, I bought MTN shares when they were trading around 60 Rand. I think that was a year and a half ago. They were trading around 60 Rand a share. Now, a few months or a year or two later, I think they're around 140 Rand a share. Correct me if I'm wrong. From 80 Rand to, let's say, 200 Rand. That's how you make money, right? You're still holding the share, but your share price has appreciated. The second way you make an income from investing in shares or exchange traded funds is through dividend income. So you get dividend income from a share. You buy a share, like for example, Kumba. Kumba pays a lovely dividend. I think they've declared a dividend right now. It's around 28 Rand 70 per share. And I think the share price is 400 and something at the moment. Twice a year, they pay me dividend income. And I'm able to then grow my share portfolio. Right now, I'm reinvesting because I'm working towards my financial independence number that I shared earlier. 3, remaining consistent, right? Build anything worth having takes time. So I have my financial independence number, and every month, because I get a salary, I work towards this number. So every month I invest a certain portion of my income. So I need to stay consistent because I know what the ultimate goal is. This thing for me, when I invest, there's this what we call a crossover point where ultimately my expenses start off high, right? And my income from my investments is low because I'm starting out. But over the years, slowly, that line will cross over. But over time, you see that your expenses will meet your investment income, and there will be a crossover where your investment income will grow faster than your expenses. And that's when you know you've reached sort of your financial freedom.
That's the goal. What tips do you have for anyone starting out? There's various routes you can do. So you can manage your money yourself, put it in individual stock and put it in ETFs. Most well-known platform in South Africa is Easy Equities. If you don't have an Easy Equities account, we'll put up a link in the description where if you sign up, you can get a 50 Rand voucher on your first deposit. But let's look at investing specifically in the stock market and in ETFs.
So I would say read as much as possible, hey? And your investment in knowledge pays the best return, right? So the first step is reading a lot. And what I did, and I kid you not, I literally Googled because there was no FinMeUp App back then. So I literally went, I heard about this person that was investing on 702 and I jumped in and I literally started Googling personal finance and anything that has to do with financial independence. So start reading, invest in your knowledge, understand what type of investor you are. Follow people that have done it before because investing is about managing risk, right? So you're saying, okay, let me understand what whatever I'm investing in. What do I want to invest in? What sort of returns am I looking for? Because that's very important. It determines the type of asset class that you invest in. And when I say asset classes, you can have some money in cash, you can have some money in bonds, you can have some money in equity, which is what we're talking about. And having that mix, do you need to have 50% in equity? Do you need to have having that split, right? Understanding that different asset classes will give you different returns. Understand that. Understand how the great people have done it. The Warren Buffetts, the mentors on FinMeUp, how did they do it? The investment grades, Peter Lynch, how did they do it? So I spent a lot of time on Google, right? Then to understand how much on a monthly basis you need to put away. So remember, we spoke about understanding your financial independence number and then working towards that goal. So then work backwards and say, how much do I need to be investing on a monthly basis to get me to where I'm going, right? Set aside that amount. If I've got 3,000 Rand, am I going to split it amongst 10 different shares, right? Or ETFs, which is not possible. Because you've got a limited amount of money, at least pick a few to start off with, right? Pick three or two or three, and say on a monthly basis, I understand this, I've researched this company or exchange traded fund well, and I'm going to invest this no matter what. So for example, for me in my tax-free, I focus on 3 exchange traded funds, right? I think I've shared them on the timeline. I won't share them here, but I've shared three of them. The core-share pref tracks for me, Resi10, the One Invest Property SA. And the reason I've chosen those is because of the tax advantage. In a tax-free, dividend income is not taxed. So I know I concentrate on those 3. I add 3,000 Rand every month, and knowing that over time, I'll be able to get a dividend income, right? And over time, I'll be able to grow. So that's just an example. Identify an amount, identify 2 or 3 that you want to invest on a monthly basis and start. As you learn more about what's your investor style, what's your risk appetite, all those good things, then you can start, either diversifying into single shares if you are now comfortable, or other forms of investments.
What do you own more of? Is it ETFs or is it individual companies?
So the only reason I own more individual companies is because of the monthly allowance on the tax-free, right? So I only started my tax-free a few years ago and I didn't max them out. So my individual shares outweigh my my ETFs.
What is some of your biggest holdings or your favorite companies that you look at?
So I like MTN. Right? I know MTN is big. I like diversified miners for the dividend income. So BHP, my individual shares. So BHP, MTN, which other one? I started HCI recently, and that's because of that oil discovery somewhere that they've discovered. In the US, I do hold exchange traded funds. I do hold that QLYD that gives you that covered calls ETF that gives you the monthly income. I love the monthly income. I'm trying to grow my USD account through dividend income. I own, which other ones? I own AT&T. So I own the usual dividend payers, right?
You love your passive income.
But yeah, so I'm in between. I'm a dividend investor, but I also like my growth. So I do a bit of both. I balance the two out because yes, dividend income, dividend payers are great, but like everyone knows, those are usually steady income companies, and the share price really won't go anywhere. Whereas your growth companies, they're not paying dividends, but there's an opportunity for the share price to rally a lot over the long term if you're a long-term holder.
Thank you so much. It's awesome to learn from you and get all your knowledge. Looking forward to see more of your content on the FinMeUp app, and thanks to everyone that listened. Hopefully you got a lot of value. Let us know in the comments what stood out for you and any tips that you found really useful. Thanks so much, Ess.
Thanks, Higgo.